Well, what happens with the economy will shape what's next for stocks. Joining us to talk about what we can expect, Bruce Kasman. He's chief economist at JPMorgan, and Bob Dole, chief investment strategist at Nuveen Asset Management. Gentlemen, welcome to you both. Bruce, let me begin with you and asking you about the economy. You say you're a half glass full kind of guy on this topic, but what do you say to the critics who say that the economy is slowing down, there's some bad data coming, and this isn't going to be good for the stock market?
Well, I think we came into the year with a real surprise to the upside. There were some temporary lifts to growth. The consumers proved more resilient in the face of tax increases. The first quarter right now is tracking about 3.5% growth. I don't think 3.5% is where the underlying trend is. I think we've got some slowing. We've got the sequestration drag in. Second quarter is going to be slowing. But I think when we look through it, we're going to feel the economy is growing 2.5% in the face of a fiscal drag. And I think we're going to look at this economy and say this is pretty solid performance.
Bob, it's nice to see you. I haven't seen you since you moved over to Nuveen. It's been a while. I want to ask you about treasuries. What are treasuries saying, if anything, about the state of the U.S. economy? Or are their yields coming down based on global tensions?
I think they're coming down, Tyler, because there is some slowing going on, because we have good news for monetary policy out of Japan, and it's breathing a sigh of relief. Look, we've been trading in this 180 to 2% for a 10-year Treasury really since the first of the year, so I don't want to make too much of the fact that rates have dropped a little bit here, but we'll keep our eye on it carefully. A break below 180 and the 10-year Treasury, and we better talk again.
You know, Bob, a lot of people are talking about a correction in the stock market, maybe 5%, maybe more. What do you say to that?
Well, Susie, lots of people waiting for that correction really since the end of last year. And of course, we had a great first quarter and it seemed like there weren't any down days. Of course, there were. Stock markets always have corrections. Predicting them is impossible. Having said that, I think the stock market's acting a little tired. Really, despite some recent new all-time highs, the stock market today is about where it was a month ago. So it's really marked time and begun to consolidate.
You know, Bruce, I'd like to get your thoughts on where you think the economy will be a year from now or over the next year in terms of the overall growth rate, and whether you think that at that growth rate, corporate profits can continue to grow and support stock prices.
Well, we'd have growth on average about 2.5%. And again, I'd emphasize that's an outcome that does reflect strong underlying performance, absorbing a fiscal drag, still pretty soft global backdrop as well. A private sector that's doing well and maybe picking up steam as time goes on here. I think the other point to make here is corporates are sitting with relatively good leverage. Labor costs aren't growing very rapidly. They don't have much in terms of pressure on any kind of underlying costs. So I think it's a good, solid environment in terms of profit growth. It's a solid environment for growth here with a lot of wiggles, and we're going to probably be wiggling a little bit softer here in the next couple of months. But I don't think there's anything serious. And in fact, I would argue the big event of the last 6 months is we've removed a lot of tail risks from the picture. Events in Europe not being a threat to global financial stability, and the U.S. political scene not really being a threat here anymore as well.
Bob, Bruce was just talking about corporate profits. I wanted to ask you about that. As you look near term, which is more important for investors in the stock market? Is it going to be earnings that come out throughout the next couple of weeks, or is it tomorrow's jobs report? Is the labor market more important?
I think the labor market is really important here, Susie. It gives us some idea of what corporations are thinking about the future. Earnings will be what they were, and they're already history, as we know, and of course forward guidance will be important. I think Bruce hit the nail on the head, however. The reason the stock market has done well is a bunch of them, but the main one is the reduction of tail risk, the absence or the lowered probability of a real problem. That's caused investors to get a little less concerned, maybe a little more confident.
Bruce, speaking of tail risk there, is North Korea the kind of tail risk that you worry about?
Certainly, there's a lot of things geopolitically, including North Korea, which can keep me up at night. But those are things I can't control in terms of my understanding. I think Europe is still weak, but it's not a threat to global financial stability. China is not booming, but it's not a threat of weakening substantially. And we've taken out, I think, the threat of a fiscal cliff, of a debt ceiling crisis in the U.S. So the picture is relatively clean from the macroeconomic policy risks that we've been worrying about a lot for the last year.
Okay. Okay, interesting discussion. Thank you so much, Bruce and Bob. Bruce Kasman of JPMorgan and Bob Dole of Nuveen Asset Management.